In this video, I'm going to talk about education credits. What are education credits? Who is eligible for them? Can a parent take them? Can the student take them? Can the grandparents take them? Who can claim them on their tax return? What do you need in order to claim the credit? And how many years can you claim the education credit? We'll cover all these items in the video today. I'll try to keep it fairly brief, so stick around for the entire video. Again, if you find this information helpful, useful, please like, subscribe, share the video, and also post comments if you have any questions or comments in general. So education credits are available to at least half-time college students that attend an accredited college or university that is on the Department of Education's database of post-secondary institutions and programs or the federal loan program list. I will post both these links down below in the description so that you can look up your school to see it's on the list. However, there's an easier way to determine this. If you receive a 1098-T, you will be able to receive that credit. So again, we will get into that in a little bit later in this video, but let's just talk about now who can claim the credit. Generally, this would be the parent. If the parent claims the student as a dependent, the parent would claim the credit, and the student would not be eligible to claim the credit. However, if the parent's income limits are over the threshold of $180,000 if they are married filing joint, or $90,000 if they are single or head of household, they will be excluded from the credit. Their income will be too high. Again, married filing separate, as I had mentioned in a prior video, is not eligible for this particular credit. So there is a little bit of a slight asterisk here. So again, now if the parent's income is over that threshold, the parents can elect not to claim the child as a dependent, or the student in this case, not a child anymore, but the student. You can elect not to claim that person, not the student, as non-dependent. However, if they are still considered a dependent and you're opting not to claim them as dependent, as you will only be out $500 because when students reach the age of 17, the child tax credit goes from $2,000 to $500. So the only portion you'll be out is strictly $500. So a lot of parents do decide to go this route. However, the benefit to the student may be very minimal depending upon how much earnings that they have. So if this is the case and you do still provide more than half your support to your child, the child can take the credit to wash out any income tax that they have. So again, if they make over the standard deduction, they may have a small amount of tax due, and the credit will ultimately end up washing it out. But again, this may not outweigh the fact of not taking them as a dependent. However, if you can claim, if the student can prove that they do provide greater than half their support, they can take the refundable piece of the American Opportunity Credit. So they just need to be able to provide greater than half the support for themselves. So now again, a way to get there is if you could say, hey, listen, they're paying for all their school, so they're getting student loans to pay for their housing, pay for their food, pay for their tuition. You could probably argue that that's greater than half their support, as they live at school for almost the entire year, and granted, they still technically somewhat live at home with you part-time. They could probably get around saying that they provide greater than half their support in that particular case. So again, that is an option. Just be ready to substantiate that the student does pay more than half their support in the event that the IRS has any questions on that particular issue. The other component is a lot of times grandparents pay for tuition. Same with parents. Grandparents would need to claim the student as a dependent in order to claim the credit. Generally, what happens is if a grandparent pays a tuition, this is considered a gift, and then they will not receive any sort of deductions or anything for that amount of a gift. However, if in a specific situation the student is actually a dependent of the grandparent, meaning that the grandparents provide greater than half the support, and the grandparent's income falls below those thresholds that I mentioned before. So again, it's down here, $180,000. For married filing joint, $90,000 for head of households. Again, this is an error on the IRS's website, should say head of households or single. The grandparent's able to claim that credit. So what do you need in order to claim this credit, to claim the education credit? Well, the easiest way to claim the credit is with a 1098-T. Most schools will provide a 1098-T if they are on one of those lists that I had mentioned prior. If the school does not provide you with a 1098-T, you will want to make sure that you have checked with the school to verify that they have, number one, that you've checked with the school and verified that they have not provided one, as a lot of schools will not send this in the mail. They'll typically send you an email or just post it within your student account. So again, double check, and parents, have your students double check, or if you do have access to their account, jump in there and just make sure that they did not get it. Some other components of this. So again, if you received 100% scholarships that cover the entire cost of your tuition, you will probably not receive a 1098T because you are required to reduce the amount you paid for tuition by your scholarships. Or if your employer has an agreement with a particular school that they will cover 100% of your tuition, you may not also receive a 1098T. And or you are a member of the military and the military pays directly to your college. You will also not receive a 1098T, and you will not be eligible for this credit. However, schools are not 100% required to provide a 1098T. Majority of them do, as it is an easier way for students to be able to claim these particular education credits, as well as reduce your level of audit risk, because this form is reported by the institution, by the college or university, to the IRS, and the IRS can verify, hey, that you were in fact a student, and then they can, justify that you were included in one of these particular programs, that you are going towards a degree. So again, if you do fall in the category and you do not receive one, you need to make sure that you keep sufficient sufficient records, not books and records, but sufficient records. So I would suggest having a copy of your transcript for that particular year. If you do not have a copy, be able to get a copy of it, relatively easy, so that you can provide that to the IRS. Now, again, this is on the calendar year, so it'll typically be fall and spring semesters. You also want to be able to substantiate any money that you paid for these qualified education expenses. You'll need to maintain these records. So again, I'd get a copy of your student account card from your college or university to make sure that you are in fact there. The IRS does tend to send bench audit letters for these education credits to verify, especially if you did not receive a 1098T and you are claiming one of these credits. They do typically send bench audits. So basically what that means is they're going to say, okay, prove to us that you were eligible for this credit, under these specific requirements that we'll go into. Again, as I kind of mentioned briefly before, but we'll go into them on the irs.gov's website. So if you are eligible for these credits, please prove to them. So again, I'd say send your transcript, send your student account billing card, and then that should be enough information to prove to them. And then again, sometimes schools just don't necessarily hit the file button on the 1098T. You might get one, but if they don't hit file or the IRS mixes up some records, they may ask you for it anyways, and then you can just send them the 1098T, and that should be sufficient. Students on F1 student visas and non-resident aliens are not eligible for the credits. So there are 2 credits that you can get. One of them is AOTC, which stands for the American Opportunity Tax Credit. This credit is available to students who have not completed the first 4 years of their post-secondary education. So basically, this is your undergraduate. If you can only claim it for 4 years. And again, as you go down here, so you're only able to claim this for 4 years, and it has to be for your undergrad. So it has to be for the first 4 years of your college degree. This credit is a refundable credit. You can get up to 40% of the $2,500 per student refundable, which means that you can eliminate all of your tax liability and then get plus 40% of the $2,500 on top of that. Again, income limit's $180,000. If you're over this, you will get 0. It starts phasing out at $160,000. So again, if you're at $160,000 to $180,000, just keep in mind that this credit's going to start to phase out. And as you get closer to the $180,000, it's going to get lower and lower and lower. Mentioned before, if you are married, filing separate, you cannot claim the credit. You cannot claim the credit if you're dependent on someone else's return, as I had mentioned before. And again, non-resident aliens are also not eligible for the credit. And then here's what we mentioned before. So you must be pursuing a specific degree or recognized education credential in order to receive this credit. You must be enrolled as at least a half-time student for one academic year beginning in 2024. So for this particular year. So it must be in there for at least a half-time student for at least one of the semesters in order to get the credit. You must not have felony drug convictions as of the end of 2024. And qualified expenses are required to be tuition, required enrollment fees, and course materials needed for course studies. Nothing outside of that is eligible for the American Opportunity Tax Credit in this particular situation. And then again, we kind of mentioned on who can claim the credit. So pretty much again, it's anybody who's going to be able to claim the student as a dependent. The other option is a lifetime learning credit. The lifetime learning credit is up to $2,000 per return. This credit is not refundable. Again, this has the same filing thresholds as the American Opportunity Tax Credit. But the biggest difference within this credit is that all years of your post-secondary education are eligible for this credit. And and as long as it's courses that are related to acquire or improve job skills, you are able to take this credit. There's no limit to the number of years for taking the credit. And then again, you don't have to be pursuing a degree or other recognized education credential in order to take the lifetime learning credit. It's available for one or more courses, and you don't have to, if you're a felon, you don't have to worry about that, as again, it does not count. So you can still take the credit if you do have a felony drug conviction. And then qualified expenses, again, similar to the American Opportunity Credit, are tuition fees required for enrollment or attendance. So this means you can't take your meal plan, you can't take your housing, you can't take your transportation. Again, it's just fees that are 100% required to be enrolled in the program. And similar individuals can take it. So typically if you're a dependent, so if you're 24 and under and you're considered a dependent, your parents will take it. If you provide more than half your support and you're not claimed as a dependent, you will be able to take the credit. Similar for grandparents. If grandparents pay your tuition and they can claim that they pay for greater than half your support and you're under the age of 24, they will be able to claim the credit on their tax return. So again, schedules that you will need in order to do so. So this is helpful if you are doing a self-prepared return. You will need a Schedule 3 of your 1040, as well as a Form 8863 education credits. And again, these typically come with an increased price. So these will typically be excluded from free file editions on the major national tax brands. And again, a CPA enrolled agent or somebody local that charges per form price will probably be a little bit additional of a fee. But again, chances are the fee will not exceed the amount of the credit. But again, if you're starting to get limited on it, you may want to ask that particular tax preparer, or you might just want to check if you're using one of the national softwares just to verify that, hey, it actually makes sense for you to take the credit and not exclude the credit, and just not have those forms filed. So then that way, you don't have to pay that increased fee. Again, hopefully you find these videos helpful and useful. Any questions, please post it down below in the comments, but like and subscribe.